using technical analysis, focusing on the current daily chart and Elliott wave theory. At present, the market has yet to show clear signs of a definitive trend reversal. Despite recent price fluctuations, we have not seen any substantial confirmation that a significant low has been established. This lack of clarity means that we are still in a phase of observation, waiting for further evidence that could indicate a true market bottom. As of now, there's no concrete confirmation that the market has reached a level from which it will reverse and build a lasting uptrend. In the short term, my outlook remains cautiously optimistic. I continue to expect that there could be some upward price movement, at least in the near future. However, it's crucial to emphasize that this remains speculative until more data points align. The market can be unpredictable, and without a clear confirmation of a solid low, we must keep an open mind. Looking back at the recent price action, particularly the low formed on Friday, February 28th, there is a potential case to be made that this could mark a key turning point for Solana. The price structure observed at this level could suggest that a substantial low has been established, though we must proceed with caution. One of the most notable factors is the formation of a three-wave pullback that seems to have found support at this level, which aligns with the structure typically seen in corrective waves within Elliott wave theory. This could be interpreted as a flat correction, which would fit within the context of a larger wave 4. A flat correction often follows a sharp decline and indicates a period of consolidation before the market resumes its primary trend. In this case, it would suggest that the market is setting up for a possible fifth wave to the upside, which would form a five-wave structure in accordance with Elliott wave principles. This pattern is often seen as a strong indication of a continuation in the prevailing trend, should the price break higher in the coming days or weeks. In the yellow scenario, the interpretation is relatively bullish. If the current price action follows the outlined pattern of a three-wave pullback and confirms the formation of a wave 4, it opens the door for a possible fifth wave to the upside. This would be a continuation of the larger trend that began from previous lows, and the fifth wave could be a strong and impulsive move to the upside. According to Elliott wave theory, the fifth wave should develop as a five-wave move, reinforcing the bullish outlook. Personally, I find this scenario to be slightly more favorable, as it suggests that the market could be gearing up for a larger rally. However, it's important to remember that the market is not always predictable, and there are alternate interpretations to consider. In contrast to the yellow scenario, the white scenario offers a more cautious view. In this scenario, we would be looking at the possibility that the five-wave move I anticipate could already be complete. If the market has already topped out with the most recent high, it would indicate that a complete five-wave cycle has formed from the 2022 low, with the market already in the process of correcting. According to this interpretation, the rally we've seen in recent months could be the final phase of the five-wave cycle that began with the January 2022 low. The next high could signal the completion of this cycle, and the market might begin to retrace in a corrective phase. In this case, the white scenario would suggest that Solana is at a critical juncture, where it may face resistance and start a larger corrective move. This would require a shift in strategy and a more cautious approach to entering new long positions. While I personally lean toward the yellow scenario due to its more bullish potential, it's important to acknowledge that both the yellow and white scenarios are reasonable from an Elliott wave perspective. Both interpretations have merit, and the probabilities between the two are relatively balanced at this stage. It's crucial to remain flexible and monitor the price action closely in order to adjust the analysis as the market unfolds. The key to success in trading is adaptability, and this situation is no different. As the price action develops, we will need to observe whether the market shows signs of continuing higher, as suggested by the yellow scenario, or if it starts to falter and retrace, aligning more with the white count. The next few days and weeks will be critical in determining which path the market will take. As we move forward, it's essential to dive deeper into the short-term structure and key resistance levels that will determine the next steps for the market. In this segment, we'll focus on the immediate price action and the possibility of further corrections or rallies. Looking more closely at the recent decline, it's important to recognize that the initial move down could potentially represent an A wave in a larger corrective structure. If this is the case, we may soon witness a B wave bounce, followed by a further decline in a C wave. This type of movement would align with a standard ABC correction, which often occurs as part of a larger consolidation phase. One possible interpretation of this structure is that it could still fit within the context of a wave 4. However, this would imply that the correction is becoming increasingly protracted, which I find less appealing from a technical standpoint. While it remains a valid possibility, I have marked it with a question mark, signaling that it's a less favored scenario. A more likely outcome would be a larger ABC structure, which would require us to pay close attention to the next rally's formation. The next key factor to consider is the nature of the upcoming rally. Should the rally occur, it's crucial to assess whether it follows a corrective pattern or signals a more impulsive move. If the rally proves to be corrective in nature, it could open the door to a deeper decline, potentially bringing Solana down to the $40 to $50 region. This scenario would indicate a much larger correction in play, and understanding these levels is critical for anticipating future market behavior. On the other hand, if the rally is indeed impulsive, we could see a continuation of the bullish trend, but this would need to be confirmed by a clear breakout above certain resistance levels. The key resistance levels to watch are located around $118, $140, and a secondary range between $166 and $266. These zones will be pivotal in determining the direction of the next price movement. A decisive break above the 266 resistance zone would open the path for a move towards the 370 to 380 region. This area is where I would expect to see the completion of the fifth wave, which represents the final leg of the current bullish cycle. This target range is my cycle target, and it represents the ideal completion of the five-wave structure that has been forming since the 2022 low. It's essential to understand, however, that while these target levels are ideal, they are not set in stone. The market does not always follow an idealized structure, and the future price movement is ultimately driven by probabilities. While the market could indeed reach these ideal targets, we must be ready to adjust our strategy if the structure deviates from expectations. Turning our attention to the shorter time frame, we face a situation similar to what we've observed in Ethereum and Bitcoin. There is currently no clear, definitive bottoming structure in place. While it's possible that a significant low formed on February 28th, the rally that followed was only a three-wave move, which is not a strong bullish signal. A three-wave move typically indicates a corrective structure rather than a confirmation of a new uptrend. Given this, I am open to the possibility of higher prices, but my confidence in this move is not yet high. In other words, while the market could move higher, it's not yet a compelling trade setup from a technical standpoint. In order to gain more confidence in the direction of the market, we would need to see a break above a previous swing high. This would signal that the market is gaining strength and could lead to further upside movement. Now let's take a closer look at the micro-level structure for Solana, where we'll dive into key support and resistance levels to watch on the shorter time frame. As we've discussed,